Underway. Very good. Welcome to all of our listeners and viewers today. My name is Spencer Chipping, and we are live right now from the Crown Counsel office and with Jonathan Moffat from Aligned Advisors. You can see Jonathan on your camera. Some of us you can see, most are just you see the names of those that are joining us. We've got a handful of others that are just joining now. Let me kind of introduce the structure of this conversation slash presentation that we're doing today and that we're doing each day this week. Each day for about 30 minutes, we bring on the Crown Counsel's experts. They are known as our resource partners. The Crown Counsel resource partners provide some of the best information that we can give to you in a timely manner, and we feel that going live and just having an open Q&A session with the experts is the best way that we can provide that. For anyone that is not able to listen in, we record this session and then share it on the Crown Counsel network, and you can listen and view this just the same. Today we're welcoming Jonathan Moffat from Aligned Advisors. Jonathan Moffat is a longtime resource partner of the Crown Counsel. We've had him share a couple times with us so far throughout COVID, the likes of different financial questions, different loan questions. What is to be expected? What should we be doing? Jonathan has a firm of subject matters that are truly the experts in each of these industries. And Jonathan is the founder and CEO of Aligned Advisors. So he becomes the catch-all for answering all of the questions today when we have him live. But I would also say that listening to him when he hosts his own webinars and Zoom calls with his entire team, what a wealth of knowledge that is to have, from Jonathan and his team. So he's going to share a little bit of that, as well as some upcoming times you can join and listen to them. Jonathan, thanks for joining us first off.
Yeah, thanks for having me.
Right from the get-go, Jonathan, we would love to hear just the most frequently asked questions that are coming to you, and then your take and advice on them right now. And I know that just by starting there, it will generate a lot of Q&A. And I will, like I said, everyone, I will unmute you as soon as Jonathan kind of shares his background, his business, and then gets right into what his firm is seeing the most right now. And we'll just go right into Q&A from there.
Okay. Thanks, Spencer. If it's okay, I know the title of the webinar was, about creating a strategic plan for having confidence in your plan in times of uncertainty, right? And certainly I think that's a very timely topic in and of itself. And so if it's okay, I'll just spend a few minutes on that, and then let's get into the kind of what we're hearing a lot from our clients as far as frequently asked questions. Is that okay?
Yep, exactly. Perfect.
So we did a webinar a couple weeks ago. It was made available to the Crown Counsel, and some of the information there won't be, as many of you know, the information has been changing rapidly. It seems like a couple times a day it changes, as those of us on the front line are trying to help our clients navigate through this. But in that, we had one of our subject matter experts, Brody, who's our chief planner, and they're talking about all the different variables that are built into our clients' plans. And although we don't know, no one knows when the next, pandemic or, economic downturn is going to be. It's important to, one, have a plan that you have confidence in, to know how you're going to navigate through those tough times, but also to know what's it going to look like on the other side. How good are we how are we on track, off track, or ahead of track? And if we're off track, how off track are we, and what do we need to do to get back on track? And that's something that obviously I would hope and would hope that everyone on this call would have, is some sort of a plan, or at least someone to go talk to about, what's the plan. We talked to a lot of our clients several weeks ago about, this is obviously a hard time and very trying time for all of our dentists, many of whom have been forced to close and not be able to see patients, and many for whom don't even know when they're going to be open back up. Whether you're in Oregon or Washington or the middle of the country, those dates are changing and constantly changing. And so that, again, that uncertainty is certainly not comforting. And so we are really staying in constant contact with our clients to make sure that that they are confident in their plan, two, that any adjustments or updates to their plan are being made, but also to really help them say that this is an opportunity for you to really work on your practice, work on your business, work on those areas where start to develop your recovery plan for your practice. What does that look like? And many of the doctors we talk to are doing that, which is a good thing. I think that's a really good use of your time. We're going to get into the PPP loans here in just a minute. And so we'll address some of the questions we're hearing about that. But certainly, we're talking to a lot of clients about, look, we're all really busy. We are very busy and a lot of times don't have time to do the things that are really most important, like updating our trust, or there's just planning things that we see that are really easy to get brushed to the side. And this is an opportunity that we're seeing with a lot of clients to help them use this as an opportunity to update your trust, review insurances. There are some things with your insurance you may be able to be taking advantage of right now, as far as changing policy coverages now that you're not seeing patients part-time, which could save you some money. And so, Spencer, as you know, and I see Greg's on here too, as Greg knows, what really makes us unique and different is that we take a team approach. We have these subject matter experts that come in, and for our clients, we help look at every aspect of their life, from tax, insurance, legal, asset protection, estate planning, and really help them put together the action plan as a team, working together and strategizing together, without our clients ever having to worry about being sold anything, right? You guys know that. So we're encouraging our clients to really take advantage of this time to sit down with us. We're doing 6-month cash flow plans for all of our clients, so they know where the next 6 months of cash flow is coming from. And we're encouraging them to look at their practices and providing some tools for them to do the same thing in their practice. Again, what does that recovery plan look like? We don't know when we're going to be on the other side of this. We do know we will be on the other side of this. And we do know that those that are prepared to come out the other side are going to come out, strong and ready to ramp up, for those who take advantage of this opportunity. So I know we'll just touch on that, on a few of those planning pieces, and then we'll switch over to what we're hearing as far as the most frequently asked Q&A. Obviously, a lot of talk has been around the EIDL. Originally, was around the EIDL loan, the Economic Injury Disaster Loan, which is the SBA 7B loan, and the $10,000 grant. I can tell you a lot of questions we're getting now is a lot of our clients, we actually helped them apply for right when that first was made available. The EIDL loan's been around since 1950, but a lot of those loans were applied for 3 weeks ago. A lot of questions we're getting right now is, do we know anyone who's received a $10,000 grant? The answer is no, we don't. And of all of our clients, we only have one client who's even heard back from the SBA from the EIDL loan, and she was approved for $150,000. It was 30-year term, 3.75% interest. And the biggest difference between the EIDL loan versus the PPP loan is that the EIDL loan, there's really no restrictions on what you can use that money for. It is an SBA loan. You're going to pay that back. Again, the terms of that are 3.75% and up to 30 years. So she happened to get 30 years, but again, it depends on the underwriting and what your needs are. Same thing with the, for those of you who did apply, you didn't really, there was nowhere to write an amount that you wanted to have written down. And so that's determined partially by the SBA as they look at your file. Also, big difference between that versus the PPP loan is that the EIDL loan is being handled by the SBA, whereas the PPP loan is going to be more handled by your bank that you decided to go through, or that you're working with. Another question around the EIDL loan that came up was, there's a section on there for cost of goods sold, and that was a big question, right? What do I put for my cost of goods sold? We got on the phone pretty early on with a a representative that we have that works very, very closely with the SBA, and their recommendation was to put like your labs, supplies, and he said any perishable or single-use items that you would use to treat a patient, that's what you should put in that cost of goods sold. We were hearing and have heard a lot of misinformation throughout this whole process, as I'm sure a lot of you have. A big thing we were hearing from clients is that their CPAs or their bookkeepers were telling them, well, you're a dentist, you don't have cost of goods sold. And we started having that conversation. Interestingly enough, when the SBA did contact my client to ask her about this loan, he said, I noticed you put 0 in there as cost of goods sold. And she said, well, that's what my CPA said to do. And he said, no, you need to have something in there. You do have cost of goods sold. So it did reinforce what we've been telling clients, which is they are going to want to see something in that cost of goods sold piece. So just again, if you applied for that EIDL loan, most of our clients applied for it with the intention of just using the $10,000 grant and not taking anything else. But we have a handful of clients that are going to use the money for various purposes within their practice to be able to use that money at a 3.75% rate over 30 years, right? So I think her payment on that loan was like $705 a month was going to be her payment. For those of you that have SBA loans, again, this may be old news, but you'll know that the SBA has deferred payments for 6 months on those SBA loans. So hopefully a lot for the most part, they just did that automatically. So not something you need to go apply for, but take a look at that. Same thing with your student loans, as long as they're government backed, those are obviously being deferred as well. Any questions, Spencer, there before we jump over to another topic?
Yeah. Hey, everybody. So that was a lot of great information right off the bat there, Jonathan. I have unmuted everybody, and we are open for some Q&A right off the bat. You're welcome to send it in via text, or you can ask Jonathan while we're on this subject specifically.
And you said wine?
No, you can't use the EIDL loan to buy wine.
What colors does this one come in?
Okay, Jonathan, I'm going to
These are pretty much, well, these are most of them.
mute all. Okay. And
Spencer?
go back.
I
Yes,
have a question.
go for it.
Yeah,
Jamie?
first of all, Spencer and Jonathan, thank you so much for doing this. Jonathan, you had just said if you have a current SBA, the first 6 months are deferred. Are they deferred or are they forgiven? My understanding is they were forgiven.
Jonathan, I believe maybe on,
He's muted.
yeah, hang on, Jonathan.
There you go. Is that better? I'll unmute
Yeah.
this. Okay. So what this kind of goes to, we saw this a lot with the PPP loan. They'll come out with a statement and then it's kind of very broad brush strokes, and so it's left for interpretation. The way that it's written is that the government will make your interest and principal payments for the next 6 months. So some people have interpreted that as being as forgiven, and others as that's going to be deferred and tacked onto the back. So like I said, we have a close contact within the SBA. We've been in very close contact with. I text them every day, multiple times a day, trying to get clarity on a variety of these things. And unfortunately, some of these we will say we just don't have enough clarity around that. So I can tell you the exact verbiage which is that the government will be making your interest and principal payments for the next 6 months. That's what it says on the SBA's website.
Wonderful. Thank you.
Yeah.
And I have questions about the PPP, and I can ask them now or I can ask them later.
If it's okay, let me run through kind of what we're hearing a lot of. And if I didn't cover it, then by all means, I want to make sure everyone's questions are answered before we get off the call. Is that okay?
That's perfect. Thank you.
All right, perfect.
Thank you, Jamie. Anyone else on where we are right now on the EIDL and from what Jonathan has shared so far? Jonathan, you're doing a great job of covering everything.
Okay.
Okay, I'll mute all minus Jonathan, and let's kind of move on to the next section. So give me 1 minute here. And Jonathan, you're good to go.
And then
Yeah, let me get them.
I'll get it.
Off on the-
and you want these 4 colors, it's fine with you,
All.
right?
Yeah, that's
Okay.
it. Yep, that's it.
Okay, Jonathan, 1 second here. Let's go back. Okay, Jonathan, can you hear me okay?
I can.
And there's one question coming in from Brett that is one that I'll share for the very end. Jonathan, carry on.
I actually saw that comment. All right.
Yeah.
So the PPP loan, obviously, this is the one that has a lot of people talking, right? Because this is a loan that has the possibility of being forgiven. So a couple of things that you need to understand with this is, first and foremost, and this is what we've been telling our clients over and over and over and over, this is a loan. So you have to go into this thinking and acting like you are applying for a loan. It's 1% interest over 2 years. So it is a loan. Yes, it does have the option, or you do have the opportunity to have that loan forgivable or forgiven, and it can be a part of the loan or up to 100% of the loan, depending on how you use those funds. But you have to please go into this thinking, I am applying for a loan, and plan on, I am going to have to pay this back, right? So what's been interesting is I was on calls even early this morning, they're like, well, I wanted to apply with this bank, and they wouldn't take me because they didn't say I was a client or a customer. I can tell you the banks are scared to death of this PPP loan. The government, as of Friday, and this is another thing too, the government had not even really helped the banks know how you're going to get your money back. And it was interesting as we were talking when this first came out, where I was talking to a lot of bankers that we know in the industry, and they were saying, how many times will you go apply for a loan without knowing like the full details of the loan and how you're going to, but they're like, we're going to have millions of people applying for these loans. So first and foremost, please go into this with the understanding that you are applying for a loan. Yes, you have the option for it to be forgiven, but at the end of the day, it's 1% over 2 years. So the questions we're getting around this, and again, the SBA, they rolled this thing out, the government rolled this thing out, and it was, here's the game, go play the game, we'll tell you guys the rules later, right? And it's left a lot of us really squandering and kind of, searching for what's the best, how do we give our clients the best advice, and for our clients, what's the best advice? For this particular loan, it's always been an issue of timing, right? Because the minute you receive the funds, your 8-week period starts. That clock starts. And if you're a dentist, and for all of our clients are dentists, and your office is closed, so you have to bring people back onto payroll while your office is still closed, while they're on unemployment. We're hearing from a lot of our clients, some of my employees are actually making more money on unemployment than they would if I brought them back on, on the salary, right? So there's all these questions around timing. I can tell you a week ago, we were told, exactly last Monday, we were being told that you could apply for the loan, get approved, and your bank could hold the funds until you were ready to receive those funds. That's what we were being told. So regardless, we told clients, we think this is a good program, you should go and apply for it. Knowing that that might not be the case, we still think you should go apply for it. Well, as many of you may or may not know, they came out last week, I think it was Wednesday afternoon, and they clarified that. They said, your bank must distribute the funds within 10 days after your loan gets approval. All right. So there's been a lot of misinformation throughout this. I think some of you have known, and a lot of it has come from some very reliable sources that has turned out not to be correct. What I'm telling all of our clients is, if you hear something and you're thinking to yourself, well, that's really the first time I've heard that, or that sounds different than what I've read before, go check out either the SBA's website or the U.S. Department of Treasury. Those are the two sources that every bank is looking at, that your CPAs should be looking at, because that, at the end of the day, is where you're going to go get all of your information. That's where it's going to come from. And they're updating and changing those regulations regularly, almost daily. It's crazy. So obviously a couple things around the PPP. The biggest thing is that it's a first come, first serve. Everyone knows that, which is why there's this big rush. But now you're faced with the situation that for many of our clients who've already received those approvals, and they've already received their E-Tran number, which is what the SBA generates to the bank to basically let them know this loan's been approved, you can go ahead and fund it. So now that 10-day clock has started ticking. So now you're faced with a situation or questions to ask around, okay, what do I do now that I have to put my people back on payroll? And what I've been telling clients is, again, you're kind of at this, you've got to make a decision. And for all of our clients, we're modeling this out to kind of help them see what the best decision is. But the decision is, you do have the option to just take receipt of those funds and sit on them until you're ready to use it. In other words, not choose to opt out of the 8-week period. But if you do that, now you've just triggered this. Now you're not going to have that. Now you're in a situation where that loan's most likely not going to be forgivable, right? Because you're not following the rules. But you've got a loan at 1% for 2 years. So some of our clients have opted just to do that. Other clients are saying, no, we're going to just go ahead and bring everyone back on payroll. We're going to have people working from home. We're going to do online training. There's a lot of online training courses you can do for your staff, whether it's back office, front office. Again, use this as an opportunity to train, to get better, to improve your systems, your processes, how you interact with patients. What's going to be different when you come back? I'm not a clinician, and I'm not going to speak clinically, but who can you go to, or what resources can you look for, whether it be your local dental association or the ADA, about what's going to come back, what's going to be different for how you're going to actually practice and interact with patients when you come back, and are you prepared? We have clients that are, ordering UV lights, or ordering thermometers, or ordering hand sanitizers, or ordering N95 masks, right? So what are you doing now to kind of be prepared to bring that back? And how are you training your staff? And how can you be using this time that your staff is back on payroll, even though you're not seeing patients, to make sure that everyone's brought up to speed so that when you guys are ready to ramp up and roll right back into practice. And for hopefully most of us, fingers crossed, April 30th is that date. And so you go, okay, worst case scenario, if you're approved, on the April 15th, you have to get those funds April 25th. You're still going to have, if you come back April 30th, about 2 months of payroll and rent covered, which now you can use that excess cash in the practice to, again, build up your reserves, your coffers, build up. I'll address that question, Brian, as well. We're getting that one a lot. But use that really as a resource to for your practice to pay bills that you're having deferred. Some of our clients aren't getting rent, excuse me, having their rent deferred, but they have half of it deferred, so you can use it to pay back that. So use it as an opportunity. But they did clarify, and it is written on the Department of Treasury. In fact, I'll read it to you. So again, I'm telling all my clients, reference. If you hear something, don't believe it. Say, show me in writing, and reference it to something. And this is straight from the Department of Treasury's website. Question: the amount of the forgiveness of PPP depends on the borrower's payroll costs over an 8-week period. When does that 8-week period begin? Answer: the 8-week period begins on the date the lender makes the first disbursement of the PPP loan to the borrower. The lender must make the first disbursement of the loan no later than 10 calendar days from the date of loan approval, right? So I can tell you a week ago, that was not on their website. That, in fact, even Wednesday, when they kind of announced it, it still wasn't even on here. It didn't physically show up on here until I think Friday afternoon was on there. The other question we're getting, and then I'll stop because this is another big one, is how is your loan forgivable? What do you need to do to have your loan be forgiven? And again, I'll just read it from the Department of Treasury's website. It says, you will owe money when your loan is due if you use the loan amount for anything other than payroll costs, mortgage interest, rent, and utilities payments over the 8 weeks after getting the loan. Due to likely high subscription, it is anticipated that no more than 25% of the forgiven amount may be for non-payroll costs. So what does that mean? It means if my loan amount is $100,000 for, and the way you calculate that, I saw another question on here, is you take your payroll for average payroll for 2019, any health benefits, any 401k contributions, and you average that out and then multiply that by 2.5, right? That's how you get to that amount. a misunderstanding was, do I include my rent and my utilities in that calculation? No, it's a little confusing. You can use the money for rent and utilities, but you do not use rent and utilities to get to that number. So if that number for me is $100,000, I can use $25,000 of that for rent, utilities, interest on any of my mortgage payments, or debt incurred prior to 2/15/20, right? The other $75,000 has to be used for payroll. Now, again, this is only if I'm attempting or want to try to get my loan forgiven. I have to follow these rules, right? If I don't care and I'm thinking I'm going to get a 1% loan for 2 years from the government, then these rules don't apply to you. This is just for the people that want to have this be forgiven. So here's the other part of this, which is really important. You will also owe money if you do not maintain your staff and payroll. So the number of staff, your loan forgiveness will be reduced if you decrease your full-time employee headcount. 2, your level of payroll. Your loan forgiveness will also be reduced if you decrease salaries and wages by more than 25% for any employee that makes less than $100,000. And 3rd, rehiring. You have until June 30th, 2020 to restore your full-time employment and salary levels for any changes made between February 15th and April 26th, 2020. All right. So again, this idea of I can wait, they put a few deadlines in here. So April 26th, 2020, if you've made any changes between, so if you've laid off a bunch of your employees, you do have until June 30th to bring those people back. You do not have to bring everyone back at once. That's a question we're getting, but you do have to, by that June 30th deadline, you do have to have your people brought back the same number that you had previously. You do need to have that number restored. So I'll stop there. I know I see several questions down here. Spencer, I don't know if you want to start with those.
I would start there. Let's just go straight to Jamie Sleds. Can I fund my 2019 401k contribution?
Not with the PPP. Again, you can, but you're not going to get it forgiven. So again, go to the website. This is straight from the Department of Treasury when they said the use of the funds. Oh, sorry. It says you will owe money when your loan is due if you use a loan amount for anything other than payroll, mortgage interest, rent, and utilities over that 8-week period.
Right.
So hopefully that answers your question.
That
Jamie.
does. It covers the 401k, then move down. Headcount is a tough one. I have an assistant going out on maternity. Can I put my wife on payroll to count as a head in her place?
Yeah, great question, Brett. So yes, so if you have any decrease in payroll, all they're saying is you have to just fill that slot. So I think as you're putting your wife on payroll, as long as that's a head count in that space, shouldn't be a problem. I would check with your CPA just to be sure. And again, we're prefacing this with every time I do these webinars, I always have to preface it. This is what it is right now, right? I mean, Spencer, you saw the webinar we did 3 weeks ago, right?
Yeah.
It's like, if you watched that webinar today, you'd be like, these guys had no clue what they're talking about, right? So it literally is like, it is day to day. We're starting to see it slow down a little bit. Just so everyone knows, because we're getting this question too, the number as of this morning is they have funded 220 billion of the 349 billion as of this morning. However, before everyone hangs up and panics, there's already talk, as we suspected, that there is going to be most likely another 250 billion is what it's looking like, going to be injected into the program. So again, you have to keep a couple things in mind. One, this is an election year. So every politician wants to come out of this thing smelling like roses, right? And they're going to do whatever it takes, whether you think that's a good thing or a bad thing, to make sure that happens. But the other thing is you really, again, go back to the timing piece of it. Really, there's a timing aspect of this. What we don't know also is when they release this next tranche of 250 billion into the market, is that going to do a reset for a new 8-week period, right? Or is that going to push the deadline back from June 30th to July 30th for those that applied? The problem is there's language in there that says if you've applied for a PPP loan, you actually had to check the box and certify that you would not apply for another PPP loan until January 1st of next year, right? So there's a little bit of timing. It's like I was on a webinar the other day. We were saying it's kind of like playing chicken with the government, right? So you're kind of like, who's going to give up first, right? So you're just going to have to really look at that for your situation. Talk to the people that you know, that are kind of on your team. Help, you know, hopefully they can help you decipher that. I'm more than happy to answer questions via email or even text or phone call as well. If you have any specific questions, I can tell you kind of what we're talking to clients about too. But you know, just keep that in mind as well. It looks like.
I think this question here is probably,
got it.
can you provide the URL of the website? That's what I'm thinking
Of which website?
that you continue to to reference.
Here, I'll just put it. Should I put it in the chat box?
Yeah.
Yeah, it's just the Department of Treasury. Here, I'll give you. So I'm going to give you the link of the actual Q&A. There's also for all of our clients. I just put it in the chat box. You can also just go to that home. If you just Google U.S. Department of Treasury, it'll pop up right. Same thing with SBA, right along the top of the page. It says COVID-19. Click on that, and there's a bunch of resources. You can actually, and we sent it to all of our clients, not because we wanted them to read it. That's what our job is, but because we were getting a lot of questions and wanted them to think we weren't making this stuff up. But there is a 31-page, outline of basically the rules that, and again, it changes, and they've changed, but. Reference this frequently, reference this whenever, like I said, whenever you hear something, go back, reference that. That's where you're going to get all the answers, your answers from as far as what's happening right now.
That's perfect. Jonathan, can you see the next question? Right here we go. Here's a scenario, PPP funds. We bring our employees back on payroll, but then does the 12-week sick pay now kick in since we are still closed?
No, well, sick pay is always, and again, I'm not an HR person, so I'm just going to put that right out front. I'm not an HR person. We've been getting a lot of HR questions. So I'm going to give you what I believe is the answer and what we've heard from the HR people we've been talking to, but please check with your HR representative. You always have sick pay, right? Even if we weren't in this environment, you're still going to have sick pay. Now, the 12-week that you're talking about is the FMLA provision of that, right? So that was something that was in the first rule that they passed, which was if you have a child that you are basically forced to stay home and take care of because their school or daycare have been closed, you have to provide the FMLA for its 12 weeks, right? I think that, Brett, that's what you're referencing.
Yeah.
So if they're back on payroll, then they're not taking that FMLA because you're paying them on payroll. So actually putting them back on payroll avoids a lot of things like unemployment. It avoids the FMLA. It avoids a lot of that. There is some verbiage in here that says, can you use the PPP to pay for that FMLA that was passed in the previous provision? And I believe, I'll have to go back and verify, but I believe they said you can, but it would not be forgiven if it's that 12 weeks that you're talking about. But again, bringing them back on payroll should alleviate that, because all that FMLA is doing is giving that employee an opportunity to get money for the next 12 weeks. Well, if they're on payroll, they're going to be able to do that. The other thing is you do have to, when you bring them back on payroll, you have to keep them on payroll. So there's another provision that says if you bring them back, but then you fire someone or you let them go after the fact or during the fact, again, it could trigger that the loan is no longer forgivable if you do that. So, when you look at this, it's really just, it's basically you're providing their unemployment. Instead of that unemployment coming from the government, it's coming from you. The other question we're getting is, what if my employees don't want to come back because they're making more in unemployment? Again, I think what we've been telling clients is that should be hopefully a good sign to you of who's a team player and who's not. Unemployment only lasts for so long. Eventually they're going to need to find a job. So hopefully that's a sign to you that this person's not a good fit. And you can start finding someone to take their spot on the team.
And here's one of those I heard, Jonathan, but as I understand it, once that team member is offered to come back they refuse to come back, then that
frees it up.
Yep, it frees it up. Yep.
Yeah,
and
exactly.
ends that. You can see Brett's question just before the next question. And then let's go into Brian Adams' question on PPP a little bit more.
Oh, okay. Scenario PP. Okay. Oh wait, I think I already did that, right?
From home, yeah.
Oh yes, but we can't ask them to work from. Sorry. Yes, but we can't ask them to work from home. I don't know that I understand the question. Brett, do you want to unmute yourself?
Let me take care of that. Okay, Brett is unmuted.
Hey, Brett.
While Brett is maybe he jumps. Okay, he doesn't have his mic hooked in. That's okay. Let's look at Brian Adams' question, and then we'll Brett will retype in his question, and go from there. Can we pay future payroll with PPP?
So this is a question that we're getting a lot of. Obviously, this is a common question, right? When this is, as entrepreneurs, I think we're all trying to look how to like use this to our advantage, right? So the question or the answer is you kind of think through this. I don't know how you would really do that because you have to bring them. One of the stipulations is that you have to hire them. So the way that the wording says is you have to either retain your employees or immediately bring them back, right? So if you immediately bring them back onto payroll, there is no future payroll to be made, right?
Mm-hmm.
You basically have to pay them what they were making before. Again, there's a little bit of wiggle room in there because it says you can reduce someone's hours by no more than 25%, but again, or sorry, their wage by no more than 25%. But then again, you're going to have to basically bring someone back and tell them, oh, and by the way, I'm reducing your wage by 25%. So that might be difficult to do, but it's really hard to pay someone future payroll when you've immediately brought them back, they're on payroll and you're paying them their current payroll. Now, there is some belief, and again, I have not seen this in writing, so I'm going to put that little asterisk by it. But Live Oak Bank, who is the largest SBA lender in the country, and actually we're very key in helping to write some of this. One of their lead head managers, I have a good relationship with him and talking to them. He said that in their conversation with the SBA, that you could use some of those proceeds to pay things like bonuses. You could use them to pay things, well, really in our industry, it's just really bonuses. If your office pays bonuses, you could use it for that. So what we've talked to some clients about, and again, I'll put the asterisk on there, is like, this is one of those gray areas that we just haven't had a lot of clarity around, and I would encourage you to talk to your CPA. But, possibly there could be a possibility of paying future bonuses maybe, or whether that's if you pay like a Christmas bonus or things like that, you might be able to do that to pay that out. But again, the purpose of this loan is to get people back onto payroll as quickly as possible, make that payroll for the next 8 weeks, pay your rent for the next 8 weeks, and really get the people back to work. Again, Brett, I don't understand as far as asking to work from home. Some employees, so you can't force anyone to really come into the office, right? They may say, well, I don't feel safe. I don't feel like it's a safe environment to be there. Plus, depending on the state you're in, you may not even be legally allowed to bring them in, depending on how many employees you have.
Hello, can you hear me?
Oh, there you go, Brett.
There you go, Brett.
Oh, hey guys, sorry for the interruption.
Yeah, go ahead. What's the question?
So here's a scenario that I worry about is I fund for the PPP, so I bring my staff back on. Repeating, sorry. Hold on. Let me try this again. Okay, that should be, can everybody hear me now?
Yeah, it sounds good, Brett.
Okay, good, thanks. So the scenario I worry about is the PPP funds, I bring my employees back on salary, and so I'm paying them, and there's definitely projects and CE and other things I can have them do, but then now that they're back on payroll, what's stopping them from using the Family Leave Act and the 10 weeks of sick pay to say, nope, sorry, I'm not going to work, and then I'm still obligated to pay them during that time? Does that make sense?
Yeah. So in other words, they can, if they want to file and they qualify for FMLA, there's nothing to stop them from doing that. Right. So the hope is that you bring them back onto payroll. Now, again, you're in Texas, right, Brett, if I remember correctly?
Correct. Yeah, Texas.
So Texas, are you guys on I think you're a stay at home, right?
Yeah, stay at home, and then
Place
dentists are mandated at least through the 21st. Might be extended.
of April?
Yes.
Okay. So let's say you get approved today. You have 10 days to get the funding, so you can delay funding for 10 days. By then, if that's, what's today, the 13th, so you're at the 23rd. Let's just say it's the 30th. So you're going to pay people a week without having the office open. But again, this is where you can, and again, depending on your state and what the regulations you can or can't do, again, every state's a little different, but you may be able to have, one person come in and make sure you guys are ordered, you're supplied up. Have you been able, are you able to, I know N95 masks are hard, but they are to find, but they are out there. We have a lot of clients that are ordering them. Is your office prepared if they do need to work from home because they're on payroll? What can they be doing? Can they log into your practice and start, rescheduling patients, verifying insurance, whatever. Think through what could they be doing at home. If they ultimately decide, I don't want to work and I don't want to come back on payroll, I'm going to just go ahead and file for this FMLA, then that's an option that they have. Same thing with the sick pay. If they've contracted the virus or and are sick, that they have the right to file for that sick pay under there as well. And so again, there's some we're not going to have time to get into it. There's a bunch of new tax regulations and tax laws that have come out, a bunch of tax credits that have come out. To help offset if you do end up having to pay FMLA and or sick pay to help you with that. But there also, you may or may not be eligible for those if you take the PPP loan. And so I was telling Spencer when we first got on, we're doing a webinar on Wednesday at 1:00 Pacific with our attorney who does a lot of tax law work. And he's going to be breaking down the new tax laws that are coming out. And, really some of you may be in a situation where the tax credits or tax savings may actually outweigh the PPP loan. Just as a broad brush kind of for that is really if you have a lot of lower paid employees, then the tax credits may make more sense for you than the PPP loan. But that's something to definitely take a look at and decide whether or not that makes sense for you or not. Most of our clients are saying we'd rather have cash in hand, right? I mean, the saying we're hearing a lot is a bird in the hand is better than two in the bush. I think is how it goes. So, right. So a lot of clients are saying, I'd rather have cash in hand. Let me decide kind of what to do with it. And again, you can always make that decision. Look, a 1% loan for 2 years is not a bad deal. I'll just take the money and still do this on my terms. Remember, even if you have your staff on payroll while you're not open or seeing patients, it's still a write-off. It's still a business deduction. Again, as far as we know now, they may come back and change that, but those are still business expenses. You'll still get some benefit from that in addition to having your staff come back and be fully prepared and ready to open and start seeing patients. So again, I think we're going to see a big difference between the doctors that really took this time to prepare and have this recovery plan in place of how they're going to get back and going versus those who didn't. If any of you are applying for loans or we're in the middle of applying for a loan, whether it be a refinance for a business, as you know, a lot of banks are not lending right now. But the stipulation that we're hearing from a lot of banks is 75%. Once the practice gets back up to 75% of their revenues, we'll fund those loans. So a lot of banks will actually get you all the way qualified, basically get you right to the point of distributing the funds and say the minute you hit that 75% in production where you can show us that you're producing that, we'll fund the loan. So again, be prepared to be able in a position to where you can take advantage of some of those opportunities that are going to be on the other side.
Jonathan, thanks so much. I'm going to kind of begin the wrap up of this Q&A, as well as unmute everybody for just chiming in with any questions that they may have, and kind of go there. So let me unmute everyone for a minute. Everybody is unmuted and can ask any questions right now if they are wanting to or traveling and not able to type them in. This has been fully recorded from start to finish and is going to be provided on the Crown Council email network. Are there any questions that you would like to ask to Jonathan before wrapping up?
I need better lighting
Yeah.
to do these.
Okay, we really appreciate.
I've got one question.
Yeah, go ahead, Brian.
When do you think that the SBA 7A 6-month forgiveness will be clarified?
You're saying for as far as the PPP loans on the 7A?
Yeah, the 7A, I'm a Live Oak customer, and they
Oh.
were saying that there was the 6-month forgiveness, not a deferment, but
Not
a
a deferment.
forgiveness. And you were saying earlier that right now seems to be a little bit murky. When do you suspect that will be clarified?
Well, what the actual writing has been is, and it may be forgiveness. If FBA's if Live Oak's told you it's forgiveness, then it's forgiveness. What the writing says is that the government will make your principal and interest payments for the next 6 months.
Okay.
There was a lot of questions around, okay, so does that mean it gets tacked on at the end of my loan, or does that just get, deferred out? If Live Oak told you it'll be forgiven, then it'll be forgiven. Again, I talk to Live Oak Bank probably 4 or 5 times a day. They're literally probably the leading bank on the front edge of this, on the front line of this, even from pushing new SBA laws through. I mean, they're the largest SBA lender in the country, so the SBA definitely listens to them. I think their head underwriter used to be the head of SBA writing under Obama, I think is what Thomas, the gentleman I talked to a lot over there, was telling me. So they're definitely tied in. If they've told you those are be forgiven, then we're in a day and age where I'd ask for stuff in writing. Like, can you send me, or can you show me where that says that, or where can I read that, or and reference it, and I would even download it and put it in a file somewhere. Because again, we're seeing a lot of misinformation out there, and for the last week and a half to 2 weeks, it's been great. That sounds good, but I need to see it in writing. Where can I reference that? And so, just shoot your SBA, your Live Oak person an email saying, hey, can you send me something in writing, or show me where I can read that these are actually forgiven and not deferred, or, I know, where I can read that, or where I can see that, where that's written. Are they going to, again, it's the SBA, so it's different than kind of more the conventional side. A lot of the conventional banks are, if they're doing any kind of loan forgiveness or forbearance, which a lot of them are, they're rewriting the loan documents. They're having you sign addendums to the loan. So, again, is there anything that needs to be signed, or is it like the kind of on the federal student loan side, those loans are just being pushed back and there's really nothing you need to do. It's just being handled and done by the government.
Thank you.
Yeah, great, Jonathan. Thanks for that. Let me unmute everyone one more time, Jonathan. And if we do not have additional questions, for everybody to know one more time, I'd reiterate that this will be completely uploaded onto the Crown Council network. There will be a link that they'll be able to click and listen to it, and you guys can listen to it again all, but everyone is unmuted at this point. Before we let Jonathan go, is there any additional questions? Okay. Jonathan, we really appreciate you as a resource partner and for everything that you provide for us and our members here at the Crown Council. It is great to come to someone that we can trust and have feedback during these times. And we know that we will be in very close contact with you soon. All of Jonathan's information, contact information, will be on the email that we send out with this link as well of the recording.
All right. Thanks, Spencer. Thanks for having me on.
Yep. Thank you, Jonathan. Talk to everybody soon, and we'll see you tomorrow.
All right. Bye.